The data looks too soft overall for the Fed to go this week. Alvin Baker, Informa Global Markets. All eyes this week are on the Federal Reserve. Slower economic momentum in the United States left inflation figures below target. Alvin, in your opinion, is the Fed justified in an interest rate hike this week?
Well, this is a tricky one, but maybe it's not as tricky as it seemed only a few weeks ago. The Fed seems to have boxed itself into making a move this year, having guided the markets back in August, first of all and most aggressively by Yellen at the Jackson Hole symposium, where she basically said that the economy warrants tightening, possibly in September. Since then, we've had a string of weakish data, notwithstanding the CPI release, as mentioned last week. And the data just looks too soft overall for the Fed to go this week. Having said that, because they have boxed themselves into a bit of a corner, I think they will go in December. So depending on the dots and the policy statement, I think they will try and veer on the slightly hawkish side of the comments without taking any action this week. And they might get the best of both worlds on that front, steepen the yield curve a little bit, because it has been flattening a lot. And I think the markets might take a December hike in their stride, because basically said they're going to do one this year, and if they don't, it's just going to make people even more worried.
London house prices have rebounded following 4 straight months of decline. We are seeing several speeches and meetings from Bank of England members this week. Alvin, can we expect recent data to be reflected in the Bank of England's movements this week?
Yes, we've got Carney, Forbes and Cunliffe speaking this week at different times, and all potentially could say something pivotal, because the Bank of England hasn't really held back in saying what it's thought since Brexit. But with the September meeting having already tweaked guidance a notch, i.e. not to expect a guaranteed further easing in November, I think it's too soon to expect anything fresh or new from the 3 or 4 mentioned. There might be individual differences, but I don't think they're going to be that large. The main dissenter in July was McCafferty, who voted against QE, and he basically reiterated his stance in the minute. So that wouldn't be new news per se. It's really hard to look beyond anything else coming new with such new data out since the minutes. And Carney and Co. basically said that they're going to sort of wait and see what's going to happen with data, and whether Article 50 is going to get triggered into 2017, whether they get a bit of a heads up a little bit before, which might be useful. Plus also there's the autumn statement to come, and I think the Bank of England will probably want to see what Chancellor Hammond does in his first review there. It's expected to be a big fiscal boost to the economy, and that might keep the Bank of England from engaging in any other stimulus for a little while longer.
And finally, the Bank of Japan kick their 2-day monetary policy meeting tomorrow. Should markets be wary of any sudden movements from the Bank of Japan? And is there any euro area data that could also shake up the markets?
The Eurozone is basically in a wait-and-see mode, more so than any other central bank. We know that from Draghi's presser at the beginning of the month. So I think, to all intents and purposes, the ECB is on hold, and Eurozone 10-year bond is in a bit of a range at the moment. It popped above positive territory last week, and it's sort of flirting with 0%. It can sort of move 10 basis points either side without causing too much of a stir. But the joker in the pack is definitely the Bank of Japan. They could actually instill a lot more volatility into markets if they basically come out and say that their policy hasn't worked, and they basically do nothing on further bond purchases or ETF purchases, the markets might take that as de facto tightening. So I think what they will try and do, or this is what the market thinks they'll do, is actually engineer a steeper yield curve, which started last week, saw JGB yields rise quite aggressively. But I think they would have to do something more than just jawboning. So it's a tough call, but I think they might actually cut rates. It's not a done deal by any stretch of the imagination, but I think a modest cut in rates might again achieve what some people want them to do.
Well, Alvin, thank you for your insights. Dukascopy TV will be updating you as and when the main market moves take place, so be sure to keep clicking back.